What's up, guys? My name is Ryan, and this is my stock market update for last Friday going into today, which is 6/22. So, last week was a really good week. We had a nice bounce off the 21-day moving average, and then the market used the 8-day moving average as a stiff floor. It really looks like volatility got sucked out of this market, and I would think we're more likely to be higher 2 to 3 weeks from now than we are to be lower. That being said, you can kind of see this channel I have drawn on the NASDAQ. This is my current, what I think the NASDAQ should be doing. So we're in the middle of this channel. I would be very cautious about taking any trade right in here. The reason for that is just simply because I think we're just as likely to have an up day towards resistance, which is about 3% above us, as we are to have a down day towards support, which is about 2.5% below us. I've found that my highest probability trades always occur whenever I buy near support with a tight stop. So buying right in here has more downside risk than normal, but we are in an uptrend, so A plus setups are worth taking. We'll see what comes. As long as the market stays above this 8-day moving average by the close, so even if intraday the market were to tank, I wouldn't do anything. But as long as the market closed within the T line zone, I'm not doing anything, and I probably wouldn't do any serious selling due to how much cushion I have on all my trades, unless the market were to decisively break this 21-day moving average slash this support line right here. So that being said, I'll thumb through all the trades I'm in real fast. There really wasn't much that changed since last Monday, because once we got that reversal Monday, the uptrend's solid. Like the market started acting right, and it's still acting right. Last week was actually my best week of the year, which is really surprising. But growth stocks were on fire. So if you were in the right stocks, you made a lot of money last week. So yeah, I'll show you what I'm in. I'll show you what I'm thinking about each trade, and then I can give you a few ideas for this week, but I don't love any of them, and I'm probably not going to trade too much until we get a pull down. And if the market just shoots up, well, I'm like 160% on margin, so I'll just let it ride. If the market pulls back, I'll crank up my margin exposure. It just kind of depends on how my stocks trade. If the market falls apart, I'll get smaller and get off margin. Here we go. Still in Adobe. I'm not touching that trade until it closes below the 21-day moving average. My buy is way down there, so I'll make money selling it off the 21. This ALNY, my buy is at right around the 50-day moving average, and I'm holding this as long as it holds above that 8-day moving average. I would need to see it high or low for me to add on to it. Amazon, as long as it's above the 21, I'm not touching this position. Biomarin, as long as it's above the 21, I'm not touching this position. Chegg, the 34, I'm not going to sell it unless it falls below. Not selling Domino's unless it closes below the 50. Not selling Dexcom unless it closes below the 50. GSX, I'm not selling this unless it were to close below the T line. Labu, I'm not selling this unless it closes below the 50. Livongo, not closing this unless it closes below the 21. Melly, I'm in this unless it closes below probably the 21, the 10. I would give this another morning. So if it had a weekday today, I wouldn't even touch it. I'd see what it looked like on Tuesday. NBIX, as long as it stays above the 34, I'm not touching it. Netflix, 50. It needs to get below the 50 for me to sell it. ServiceNow, as long as it's above the 21, I'm not selling. Okta, 34, not selling. PayPal, 21, not selling. Regen, 50, not selling. Shop, 34, not selling. Teradyne, 21, not selling. Tandem, 50. Twilio, 21. Vertex, the 50. Wingstop, the 50. Wheaton, this is the only trade I took yesterday. I started a position in Wheaton. That's just a strong candle. Look at that volume right off the 50. We've got a cup type base forming. That's everything I look for. Plus, it's a silver miner, and it's also the best silver miner. If you look, this is the only silver miner that's in all-time high territory, higher lowing, and that's a whole lot of technical strength. So I like Wheaton. I like the way this looks. I like everything about it. The best miner in the market, this is me going off on a tangent, is this DRD. This DRD is so damn strong. I knew to buy it when it was down here around $10, but I didn't go for it. But DRD, I wouldn't buy it here because that's extended. But this is the gold miner that I'm going to try to get into if it gives me a setup. Anyways, started a small trade in Wheaton. I'd be willing to size it up today potentially if it had an up day. I might just sit on my hands though because we are mid-channel on the NASDAQ. And then Zscaler, as long as it's above $100, I'm not going to sell this stock. So that's everything I'm in. So as you can see, my stops are way below current price right now. So if we had a down day, I would eat it right on the chin, and it would hurt. It would definitely be a big down day. But I mean, look at those stocks. Last week, most of those stocks were up 10%. So I've got a lot of cushion on these positions. So I'm gonna give them their respect because I actually think we're at the beginning of a long-term bull market. There's a lot of people that think that this is an overbought bear market rally. I think that those people are incorrect at this point. I think they're blind. I don't think they can see what charts look like personally. Um, I think that we're in a 1982 type scenario, really, because if you look at the market, it looks better on the Dow. The Nasdaq's quite strong, but if you go to the Dow or the Dow Jones on a monthly chart, we've just had a 20-year consolidation period right here from 1999 all the way to 2016. And then this is the first time we've broken out and retested that 2016 higher low. This reminds me of 1982 a lot more. I don't have the 1982 market on this current software on this computer right here, but the 1982 breakout reminds me of what's going on right now. I may or may not be right on that, but for the moment, it's kind of trading like that. So because of that, I think this market's got some legs. That doesn't mean that it's going to be straight up from here. All bull markets have 5 to 10% corrections along the way. So I fully expect numerous, like what we had a week ago. What is that? That's a 6% correction. What's this one right here? This one right here. It's a 5. What's that? About a 5. So I mean, all bull markets, and then even right here, what's this one? A 7. 5 to 10% corrections on a bull market are completely normal. So I fully expect that type of action going forward, which is why I want to give my stocks their room because I'm trying to make the big move. Your typical growth stock, like Adobe, for instance, broke out of a stage 1 base right here. It was a stage 1 on 1 base. So this is a stage 1 breakout. After a stage 1 breakout, your typical growth stock can run for up to 18 months. So that means that these stocks will have, like what Adobe did, what is that, a 30% correction? So these stocks will have 30% corrections along the way, but they'll high or low for 18 months. So it doesn't mean I'm going to try to hold everything I'm in for 18 months, but I do have that time frame, and I'm trying to hold on to perhaps some of them. The ones that I think are my A-plus trades, like this Livongo, I think is an A-plus trade, and something that potentially could really catch its legs. So I'll show a couple trades that I like. I don't love any of these though, but I am looking at them. Triple silver. I like the way triple silver looks. It's like a J-hook type pattern. I could see sneaking into triple silver being a good trade right here. Same thing with triple gold. Triple gold's been consolidating for a couple months now. Nice little flat, tight trading range. I like the way LRCX looks. That's a cup with handle. LRCX cup. Handle broke out last week in the buy range. This AMT, American Tower, that's a lot of volume going through this pivot at 260. So that's buyable today if it's green. Generac has made a cup with a handle, and it's about to break into the buy zone of the handle. I like Generac. It's a good company. I like their product. Eli Lilly, or however you say that, Eli Lilly. If this thing has an up day off of one of these short-term moving averages, that's a buy. I love buying the first up move after a gap. This is BJ's Wholesale, and this is one that I was actually in a little bit too early. I think I bought it right here, so I bought it too early, but BJ's is a buy if it's green again. And then those are the ones I really like. I guess the last one I'll show is Fortinet. If Fortinet's green today, that's a buy. This thing's consolidating right on the 10-week line. The 10-week line is this pink line. So if Fortinet were to be green today, that's a buy. So that's what I have for you. As always, think for yourself. Make your own decisions. Don't do anything because I said it. Don't do anything because anybody said it. Think for yourself. Use your own mind. I'm using these. My purpose for making these videos is I just want to show. I'm putting out videos that I would have liked to run into whenever I started trading because I'm showing you exactly what I'm in. I'm showing you exactly how I'm going to manage the trade. And I'm showing you what my plan is as far as adding on to it, selling it, and what other trades I'm looking at. For today, there's about a 99% chance I just hold. There's maybe a 1% that I buy a little bit more Wheaton, and then there's about a 0% chance that I sell anything today. Um, Close to zero. Obviously, yeah, I know if North Korea fires a missile at us and the market tanks, I'll probably sell some stocks. But barring some kind of black swan event, I'm not selling today. So we'll see what comes and crush this market, guys. Let's make some money. Good luck.